There it is. Thank you, Angel. And Heidi ho, everyone. Welcome aboard. It is Magic Monday. It's always Magic Monday, isn't it? Every Monday's magic. Not back to work. Hate it, don't you? Anyway, it is what it is. And we are here once again. And I'm glad you could join us for this Trading Buddy session, which, of course, Ash and I will go through. I think we're back in action. It's kind of the first week back, and I'm struggling to get my words out. I apologize for that. I will look firstly at pound US dollar to see if we've got a breakout that we want to trade. And there it is. Hourly chart suggesting that the range for the last 24 or 48 hours is there to there. I would have to concur with that. Let me see if that's worth following. So it's kind of there, isn't it? What do we got? I think I'd rather be short than long at the moment, but there you go. That's not what we're here for. We have got 73 pips trading straight into yesterday's untested daily pivot, straight into the weekly pivot. From there anyway, but if we trade the breakout, we're trading from there, trading from there. How high can we go? Yeah. How low can we go? Out there. Okay, I'm in. All right, so we will go 5 pips above the high as an entry. We'll go 3 pips below the low as an entry. And of course, they will be the stop loss for the reverse. So the first one, the long, will be entered at 1.3896. We might as well just put that in. Now, remember, guys, this is still beta test mode. We are not advocating that this is a proven strategy by any stretch of the imagination. So please bear that in mind. The level I said was 1.3896. Hope you all had a good weekend, by the way. I did. Fairly relaxing, a little bit of work. The stop loss will be 3 pips below there, and that will be 1.3814. That'll make sense. 1.3814. So the reverse of that will be 3814, 3896. So we will go sell. $1.3814 and 1.3896. Done. Righto, there's the entry short and the stop loss for the long. There is the entry long and the stop loss for the short. So that's all set, ready to go. If I were trading the pound today, where would I like to be trading it? Oh, gee, it looks head and shoulderish, doesn't it? Not perfect. Yeah, I think I'd be rather trading it short than long, I've got to say. Is there an entry there? Well, you could play the lower high, but it hasn't bounced off the top yet. That's the problem. I guess you could say it did last. It's getting a bit sloppy on that chart, I've got to say. Yeah, I think I'd rather wait till we hit the top of that before I look to trade it short at all. Then we'll let it go. Right, our updates. We have been dismissed from, I think, 3 trades over the weekend, or on Friday, really, because I just decided that we were reaching resistance or support levels, and I didn't really want to take the weekend on with anything at large risk. everything was in profit. And I decided that if we got out by trailing our stops very tight, that's fine. We could always look to get back in if we thought that was appropriate. So what we did was on Aussie CAD, we moved our stops to trail at 2 buyer bars. I think we did that at this point, and that's pretty much where we got out because price came back and took us. I might have got up to there. Can't remember now exactly. So Aussie CAD is out, so we can get rid of that. And that's nice trade. Is it over? Look, I think for the meantime, and that's pretty much why I did what I did, we were at resistance. And I think we're probably now going to see a bit of range activity. So I'd rather be trading short than long, and I don't really want price to come back here and take most of our profit out. Not that we'd lose anything because we've obviously taken 2 lots of profit, but I think that was the wise thing to do. If it takes off now, then so be it. We could even look on the daily chart tomorrow to see what that bar's like, and if we so chose, if it was this small, we could probably put an entry there with a take profit just before the highs, as long as our stop loss is very, very tight and very, very small. I think there's probably room for that tomorrow. So we will look at that tomorrow. What was the other one? CAD Swiss. CAD Swiss, exactly the same. We decided to trail because we've been in, out. We'd come back from the depths of despair. Well, not the depths of despair, but we were on track to get well into half of our profit or half of our risk there. And I decided that once we got back to even and couldn't get TP1, we only missed TP1 by a few pips. Once that happened, I just said, no, I'm out of here. So I moved my stop to entry, and that was hit. Now, it looks like price does want to go to here, and no surprise about that. I think I'll reassess if and when price does get to that level. If, however, we are fortunate enough to come back to the weekly pivot first, then perhaps we may look to re-enter this at even a better price. So I'm okay with being out of this at break even. And even if it does go to here, that's fine. If I then determine that the reversal is in fact going to happen, then we can scale into that. Well, we can get into that. But I do like the fact that the weekly pivot's here now, monthly pivot's here. So there will be a certain attraction to this area. And if that's the case, maybe this is where we need to pick this up rather than where we were just at the top of that range. So I'm okay with being out of that now at break even. The third one that also had trailing stops hit was Euro Kiwi. Euro Kiwi, corker of a trade. It did very, very well for us. And it's having a little bit of indecision here at the daily pivot today already, but we have been taken out. We trailed 2 bars as of Friday. And we got from there down to here, down to here, down to here, before we got taken out with this bar this morning. So Euro Kiwi is now out, and we got, what did we get out of that? 300 and something pips, 330 pips, I think, off a, 48 pip risk. So that was a pretty good trade as well, Euro Kiwi. So that leaves us with 2 only trades, both the monthly trades, or me with 2 only trades left in the market. One is pound Kiwi, which is not doing well and does look in jeopardy here now, because we have broken very, very strongly below that ascending channel, which of course is where we don't want to be. Look, we're trading this at small risk. Yes, the holding costs are substantial, but at the end of the day, we've still got potential for a higher low in here, and we're still getting higher high, higher low, higher high. If this does become a higher low, then this can just as easily go back to where it came from, and I think that's entirely possible. I think the Kiwi is has been on a bit of a tear. I don't expect it to slow down too much, the Kiwi, to be honest. although they are having COVID issues as well. But I think the Kiwi, because of its status as a, well, two things really: risk on currency and also a commodity-based currency, I think it's still got a little bit of upside. So this is in jeopardy. Much will depend on how the pound can perform over the next couple of weeks or so. And the other one, of course, is EuroCAD. EuroCAD I haven't got on this chart. I don't think I've even got it on this one. EuroCAD. I haven't got the trade, but I can show you that chart anyway. I must have a EuroCAD here somewhere, surely. Or not. Let's go to here then. EuroCAD monthly chart. So I think I did tell you guys, I wish I had my other account. I can't put my account on this here. I think it's now time to move our stops, guys. We got in up here somewhere, so we're 600 odd pips to the good. And I am reluctant to move the stops because I said I would be in this at Christmas time. So maybe that's still on the cards, but I think probably stop loss to there makes sense, down to 150, 170. I'll call that now and make sure I do that on the account that we're actually trading it on. 150, 170 for EuroCAD. Okay, so that's outperforming. Oh, what else have we got going on here? Oh, they're pending on pound. Right, got it. What was I saying? Got no bloody idea. Craft. Ash is just, when you get to this age, it's just phenomenal how quickly you forget crap. And maybe I was talking about crap. How you doing, bud?
I'm good, mate. I'm good. There's actually an opportunity with the FTSE by the looks of things, which I'll bring you if you're done.
Yeah, well, I am. I haven't talked about today's stuff, but there's nothing urgent, that's for sure. We'll do that later.
Okay. All right. So let me just share my screen here. We're looking for
hey, Lewis, the listener.
Lewis, how you doing, buddy? Probably this one here. This is what I'm after here with the FTSE. I'm looking for a long, but I just wanted to touch this level down here. It looks like on you guys are going to be looking at the UK 100. So what I've done is just drawn this line along here. Might well be there. So as soon as it comes down, looks like around about 71.50 on the might be a little bit lower than that. Somewhere between 71.50 and 71.45 is what I'm really looking for. There are pivots down here as well. So in this zone, I will draw it. I am looking to buy. Let me just draw a little shape. This whole area, that whole area there is a buy zone, and I think it's quite good because there's some conflicting chart, but there's a conflicting chart pattern with the 4 hour, which could suggest that we are actually we're at a high on the 4 hour and we could be going down. So I'm kind of hoping that that's the way that some people are reading it, and we get our price point. Looks like around about 71. Yeah. So if it comes anywhere near this level, then I'm just going to buy it up. I'd quite like it to. I quite like it to get to 71.50 on the buy on the futures. So you just have to look at your chart and see what that looks like on the UK 100. But it might take a little while. But I quite like it. You know, we've had obviously bad jobs numbers from the US on Friday, and that should leave us with a relatively buoyant picture still. With the FTSE, it was the price action was, I think, maybe a little bit surprising to me. You know, this is pretty much what happened on the UK, on the US Open. It's just started to drop down. But we'll look at some of those numbers in a moment. I don't want to take my eyes off this just yet. I want to see if we can get into this. But I'd like to come in and have a look at those numbers and just dissect them a little bit, just so we can kind of like see what it's all about. We've got ECB this week at in actual fact, what I could do, just so we can talk some more, I will put in an order. Let me put my orders in here, and then you guys can do your thing. Looks like first contact is going to be somewhere near the high, so we should be able to get maybe a decent 15 pip run out of it as well. So I'm just going to aim from down here to try and get back up to the highs. Let's put a buy limit in there, and I'm going to go in at 71.50. I think it'll come a little bit lower, but I'm not 100% sure. So let's put that in there. That leaves us down to 71.48. It might be a couple of pips sort of in it. 71.50, there we go. Just making sure it's all right on the other system as well. Why is that there? Yeah, that should be right. There we go. Right, so I've got the order in the market. Now we can just have a look around and see what we got. So we're you know, a good 6 away from there. As I say, there are some pivots down there. Let me just bring you the other chart, just so we can have a bit more of a look at it. And you can see down here, there's the pivot down there. Now that leaves it around about 71.46, which with the spread is going to leave us to around about 71.48.50. So 71.50, somewhere around about there. It just depends on whether it respects the trend line or whether it comes down and respects the pivot. So just have to hope it comes down just that little bit further. But let's have a look at the 4 hour, because the 4 hour is where it gets a little bit more interesting. Actually, we might have to change this to clean again. Yeah, the 4 hours where it gets a bit more interesting, because this wasn't a low, but it's a really negative looking bar. So I would suspect there are probably maybe some people looking at that as a potential break point, which hopefully will get us in. I think I might just shove this down just one more pip to 49. Looking for a CRM. Actually, only one of them. I'm just going to modify it and see if I can shove it down a little bit. I'll put that at 49 instead. So it's in the area, but I think we should be okay. At 71.49, and I'm going to do the same on my other thing. 49. And if we get in, then I'll deal with I will deal with the profit after that. If it touches that high before it comes to the low, which it might well do, then the trade is probably off for the day. I don't think I can. I don't think I could justify trading it. So I might have to ignore it. Let's have a look around anyway and see what we have had going on. I was analysing these yesterday, so let's have a look. Because Friday was a big day, actually. Not just jobs. There was a few other bits and pieces that were coming out. Catering services PMI from China in negative territory. So there's a little bit of a problem going on right now with China. There's just a shade of weakness that is just plaguing the Chinese economy right now, which we'll see if that can iron itself out. It probably will in the long term. I don't think it's anything too concerning, but it is something to note that China's numbers aren't quite as exciting as they have been. SF, how you doing? So that's one thing to note. But you can see that there's quite a lot of negative looking numbers here, but they are still in growth. Euro Spanish PMIs were there. Italian services PMIs, German services PMIs. This is a long way off from what we saw, during the height of the pandemic, where there was just quite a little bit of panic going on, and these numbers were nowhere near the 50, but now they're comfortably above 50. So services PMI from the UK at 55 as well. So there's expansion going on. It's just slowing off a little bit, but there is expansion going on. Average earnings month over month from the United States, a decent number, but it's this non-farm number which was so disappointing. Previous at nearly, what's that look like a billion people of the previous month. Then we had, sorry, is that a million? Then we had 720,000 people, but the expected, but we had a 235,000 increase in jobs numbers. Not very good and not conducive to that taper. And that's really what we were talking about yesterday. No taper really puts the market on the front foot. Now that means that liquidity should remain. There's no reason that they're going to start reducing the pool of cash that's going. The central bank are not going to reduce the pool of cash going towards the government. That's pretty good for the markets on the whole and generally speaking. Final services PMI came in just around about the same as it did the previous month. And you can see ISM services PMI here as well. Still, okay, it's a slight miss, but still in expansion mode at 61.7. So what this is telling me is that things are okay. Things are bubbling along. They're not any longer really kind of doing anything hugely expansive, which is to be expected. We've already had that massive surge back to recovery. Now we're really not in that recovery zone anymore. We're not in the recovery phase anymore. So things are just bubbling along very nicely, which is great. The data does not suggest that the central bank are about to move. We know they want to move, and we know they probably are getting near the point where they should be talking about moving. That conversation has happened. But these numbers aren't giving the central bank the ammunition they need to do that. Now that really puts the stock market on the front foot, even with the crazy valuations. FTSE completely different to the S&P on that front. The FTSE isn't overvalued, but the S&P is, and if the S&P comes down, then the FTSE is likely to follow it. But those valuations are hot, but right now, not really anything to worry about. I think there could be quite a vicious turn, and we've got to keep watching these numbers to see what we expect the central banks to be doing. And I think that's really, what's going to be going on right now. We're going to be waiting for the central banks to waiting for data to make an assumption on whether the data is good enough for the central banks to actually react. Now, coming this week, we have got a bank holiday in the United States, so relatively quiet over there. Still means that we can make some money if we can get the right price. Then we start getting some of these statements coming out. So the RBA statement is on Tuesday, and that's going to be keenly watched because I think that a lot of traders are calling for an Australian dollar hike in prices. We expect the Australian dollar to rally. The cash rate will very likely be left where it is, but it's going to be the devil will be in the detail, and we need to really be on top of what the statement says, and how they are looking to handle the coronavirus going forward. And it appears that everybody's starting to accept that we're all going to get it. So we just need to deal with how we're going to live with it, and that means that economies can open back up. And as long as the NHS or the respective health services in different nations isn't overrun, it's probably going to stay open. The economy is going to stay open. ZEW Economics.
Mate, I think on that point,
yeah,
the RBA are probably in new territory now in terms of the coronavirus because of this decision to get rid of the zero COVID scenario, which has obviously been the tactics of the Australian government since COVID was a thing. Yeah. So it's not uniform. It's not across all states, but it's certainly across the majority, which is not the majority in terms of state numbers, but in terms of population. New South Wales and Victoria have adopted that principle. And as yet, Queensland, which is obviously the next biggest in terms of population, Western Australia and Tasmania are still grappling with zero. So it's not 100% uniform, but and that, to my mind, gives the RBA room for doing absolutely nothing and waiting to see exactly how this pans out. So I don't think you'll see any statement from Philip Lowe that suggests they're going to do anything other than wait and see how this pans out.
Right. So what we might find with that is that we're caught in a bit of a range with the Aussie. So the
I think
high end
so, mate.
Yeah, so it might well get sold off then in that case. I think the longer term picture is, it looks pretty bright for Australia, but that does suggest from what you're saying that there might well be more of a likelihood that we stay within a range. So if it starts to pump before we're able to get on board, maybe that's the wrong time to get long. I'm not saying we should go short by any stretch, but that would suggest that there's going to be a price point which is worth getting involved, but otherwise you ignore it.
Yeah, look, I could be wrong. They may well be buoyant on that news, but the way I read their point of view is that they'll just go, "Oh, okay, this is new information. Let's just see how this works."
Okay. Monetary policy statement here is from the United Kingdom as well. We have ECB monetary policy statement. Now that's probably the big news of the week, what the ECB say, because there has been a few indications over in Europe that they're coming out not only the other side of this stuff, but also that they are starting to possibly need to talk about the same things that the United States is talking about as well. So lots of interesting statements that we need to be on top of. So where sometimes it's all about jobs numbers, or sometimes it's all about PMIs, or sometimes it's about inflation, this week it's about statements. And this week I'd encourage everybody to read the statement. You know, you don't tend to have to do a lot of reading when you're looking at fundamentals. Most of the time you can look at the data and you're done, and maybe put it into a spreadsheet if that's the way that you like to interact with it. But this week it's going to be about reading, and I would suggest that everybody should read the statements from Australia, that the UK, and from the ECB. Now, if you don't get to read them, I will keep you up to date with them. I'll certainly keep you up to date with Australia and the pound, because it'll be before the end of the week, and we'll still all be together. But the ECB, I won't be. We don't do Friday, so you need to read that one yourself. We also have FOMC member Daily speaking, not so interested in that. So the smaller guys not interested in, but when it comes down to the main kind of players, then reading that stuff is going to be important, and making some notes on that. Unemployment rate from Canada as well, and some PPIs from United States. Again, not as important. These numbers aren't going to be anywhere near as important as the statements. The statements are going to cause and create the bedrock for what we believe they need to be looking for going forward. So that'll give us a fairly good roadmap on what data is going to be pushing the markets. So that wraps that up, mate. Now the FTSE, I think, has moved to the upside without us. Yeah, it has, unfortunately. So a couple of pips away from entry, actually 4 pips away from entry in the end, because that's the sell price, and obviously we're trying to get in at the buy point. Might still give us a chance there. I'm going to leave that in the market there. Might drift to the downside. It's a holiday in the US, so anything could happen with the reins and shackles really off the FTSE 100 without the US on board. It might well be that the FTSE could move beyond its price, but its highs today. But then you could look at it on the other side of it, that without the US, it doesn't have the follow through. But I think that the former may well be the case. We might actually get a little bit of a rally today, mate. There's every chance and possibility that there's a little bit of a rally today. Just to touch on a couple of other bits and pieces as well. Gold has broken through to the upside, but it's just on the top end of this what could be an inverted head and shoulders forming here, possibly. Top end of that, it's got a little ways to travel before it hits these upper levels here. So I think that there's every chance that gold gets to 1860 before it starts to retrace again. The jobs numbers from the United States really didn't help the dollar out at all. So there's nothing today which would suggest that that there's going to be anything with in the way of conflicting that particular point of view. So we might start to see gold at least hold this particular point here. Bitcoin doing very, very well. Little gap to the upside so far this morning, but that's been pushing and pumping for quite a while. I thought Bitcoin would come down to around about 40,000 before it pumped, and it looks like it could still do that. You know, I'd like it to see it down here one more time before it goes up, but things are looking pretty good for cryptos. The interesting analysis on what's going on with Bitcoin is to do with leverage trading, and it appears that the times that we get things like this, it's because people have over leveraged and accounts are closed down. And I think some of those leverage accounts are starting to increase quite significantly again. So this is the reason that these markets are so volatile, is that people don't own the underlying asset. You know, they're actually trading it with leverage, and obviously when those accounts get closed down, then that's when you see the real kind of pump and dump stuff going on. So Bitcoin still looks pretty good. It's still relatively solid, but really until it kind of like breaks through this trend line, there is still enough resistance which could suggest that this particular lower low here is in play, and we might still be in a downtrend. You know, it's not yet confirmed to move the other way, which is why I'd like to see Bitcoin come down and create a higher low, and then start to see whether it can survive and move higher, which I think it probably will. But I'd much prefer to see that. I think that'd be a much cleaner and safer kind of way to see the Bitcoin price chart go down one more time, create a higher low, and then with a higher low created there, then it would suggest that we've got a confirmation of a trend to the upside, and then, you know, picking up Bitcoin around about 40,000 would be the sensible way to play that. Ethereum's been pumping. We know a lot of this is off the back of the NFT explosion, which does not stop. You know, I've got friends now telling me that they are going to be building NFTs because they've heard that the guy next door has made a few million on making these NFTs, and it is a crazy world. What's that?
We're going to do one. We were going to do one bloody 6 months ago.
I know. I don't know what happened with that.
No, I don't either. Shukri got too busy, I think.
I think so. Yeah. I mean, it is. You know, the interesting thing with Ethereum, I think, is that there's always been this kind of talk in the background that there are Ethereum killers out there. Polkadot has not managed to do that. Solana looks like a pretty good pretender to the throne. I mean, it's getting so much adoption right now, up 100x really from the start of the year. So Solana looks like a massive potential. And obviously we got my buddy Cardano launching smart contracts on Sunday. So Ethereum, if you've ever done anything on Ethereum, it is just too expensive. It is just, you know, it's a terrible system, really, the amount of gas fees you pay to the system. So I wonder whether they can all just coexist and we just get this, you know, this continued kind of move in all of them, this pumping in all of them, or is there genuine, you know, going to be a change of sentiments away from Ethereum? So Ethereum's probably the most interesting when it comes down to these cryptocurrencies, because it is the kind of big one right now, in as much as a network is. Sorry,
mate, I had to go off mic. I hope you didn't ask me a question.
No, mate, no. I was just saying that this is the most interesting when it comes down to the network story, because it's got, you know, other ones that are now coming forward that have got really much more. It's much more modern kind of system. It's a much more modern system, kind of seeing what Solana are doing and what Cardano are doing. Ethereum has kind of fixed it as they've gone. If version 2 comes out and it's you know, Ethereum 2.0 comes out and it fixes a few of the problems, then great. But I'm interested in see what happens with Ethereum. I think it is the most fascinating, not for buying. I think, you know, if anything, Ethereum is the most interesting to potentially sell off. And that's not because of the crypto space dying. It's just that it's got its contenders, and those contenders may well dethrone Ethereum somewhat. You know, not completely, but somewhat. There's probably too many too many things built on Ethereum for it to die completely. But the gas fees and the speed of it is a problem. And as we approach these all-time highs, who knows what happens up here? So lots of things to consider, mate. But I think that the main thing is that we are in relatively bullish sentiment this morning. If I can get into the FTSE, that'd be great. Anybody that's involved in anything with risk on sentiment, I think you're doing okay, because you look at the VIX as the fear index, pretty flat, not really going anywhere, and if anything, it might well be coming down right back down to its lows. So nothing to see, I think, is the message on the board. Ready, mate?
Yep, fair enough, mate. As you say, there's a fair bit going on this week. I think there'll be probably a few things unfold that we can maybe grab hold of as the week goes on. Let's see. Let's have a look at the euro, because it is now hour, and that's the time I tend to look to trade this currency pair. Look, you've got to get a good grasp of what's going on with this, and to my mind, the only way you can trade it right now is long, for a few reasons, but primarily because of the technical situation. It just cannot get back through this monthly trend line, which, if you go back to there, doesn't belong there, it belongs there. So it just cannot get back through there. And on all charts, we're seeing nothing but support, in my humble opinion anyway. We did break the support level, but we couldn't get clear of it. We've come back above it. That's on the weekly chart that I'm looking. And we've now started to form a range. And if I'm not mistaken, we may well be in here for quite some time. So I'm going to look to take advantage of that situation, if at all possible. And I'm looking for a long here today. But we've got to see what's underneath us. And what's underneath us is the weekly pivot. So I totally see either the weekly pivot or the backside of this trade line being tested before I actually look to go long. Now, this could be a turning point as well. It could well be that we sneak back underneath there and spend a bit more time down near the bottom. That wouldn't surprise me at all, because really we haven't had a significant low. Like, there's a significant low, right? It's not here on the other side. So it wouldn't surprise me in the least. And if we have a look at the symmetry of that, where's my pen? Would not surprise me in the least if this comes down to here, monthly pivot area, and that's where it takes off. So it's not as easy as it first appears. Yes, I am long biased, medium term, but short term, I think I'm okay to go short, to be fair. So let's take a look and see if the short to get long scenario can actually play out. I'll get rid of that pen now. That was supposed to go away. That, thank you. So let's creep down the time frames and see what we can find. So short to get long, right? Short, can't go short at the moment because we're bang into the weekly pivot. What am I going to expect here? I'm going to expect a bounce in between the daily and the weekly. So I'm really not interested in trading this pair right now. I can see that we've got potential downside, but we've got to get clear of that pivot. So if I'm at all interested in this, it ain't going to be today, I don't believe. Unless, of course, we break the weekly pivot and maybe something like this happens. Maybe we hit the weekly pivot, get back above it, then come underneath it, retest the confluence area, then go short. That's an hourly chart. That's entirely possible later in the day, but you've got to remember that there's no US session either. So this is likely to be a little bit unpredictable. I think the chances of me wanting to trade this today are remote. Now, that said, if I'm a slingshot aficionado, I'm looking at this chart and going, Ooh, approach, pullback, approach, pullback. Great candle to trade. So can I snipe a little bit here? Stop there, about 13 pips of risk for 9. Do I really want to take that on? I don't think so, because remember, my bias is short. So yes, it can go, absolutely can go. But I don't really want to take that on. The good part is the daily pivot looks like it wants another test. But the bad part is, look where you're trading into. It's recent resistance. So it's a no for me. I'm not going to trade the euro at all today. Full stop. That's it. So that is the euro. Now, 2 weekly game changer bars this week. Only 2. And I think we had exactly the same 2 last week, didn't we? If I'm not mistaken. No, I'm mistaken. Yeah, I'm mistaken. Seems we had the same 2 last week. Maybe it was last month. I don't know. It just gets away, doesn't it? This is still euro dollar. That's not where I want to be. I want to be on Aussie Kiwi. That was the first of them. Now, game changer bar here. Look, it's a red bar. And you know I love trading red bars long. This has got potential in my humble. I said yesterday in the Sunday market update that I would have a good look at this. And if the gap wasn't too dramatic this morning, that I would look to trade it. I don't see any reason why I shouldn't do that, frankly. Let me have a good look. The only possible issue that I have is that low there. And we are above that low. So well, are we? That's probably the level there. So we're trading into it. So I've got to take that into consideration, right? So have I got room for TP1? Yeah, I have, totally. So I am going to place a long on Aussie Kiwi, and I'm just going to use the candle. So above the candle by a couple of pips and below the candle by a couple of pips. I won't waste your time doing that now, but I will give you the levels that I'm going to go in at. Aussie Kiwi buy at 104.49. 1.0449. The stop loss will be 1.0343. So 106 pips of risk. And TP1, I've got to get that level. Only just qualifies, but it does. Let's go with 104.93. TP1, 1.0493. So there you go. That's Aussie Kiwi. The second, hang on, I get very nervous when I click on this button, is dollar yen. And again, we have a game changer bar on dollar yen. Now, 2 weeks ago, we had a game changer bar on dollar yen, and we got taken in and we got taken out. Now, I think that was on a daily chart, actually, that we traded it. Otherwise, we would still be in that trade and going ho-hum, what's going on here? Nothing. Look, it's there. I'll put it that way. Am I going to trade it? No, it's not clear enough for me to trade. And I hate trading dollar yen, as you know. I think I lose more than I win when I trade dollar yen. I should go and do that stat and then just completely convince myself that it's worthless, or it's useless me trading it. But there it is, game changer bar, and it has potential to go short. Take your pick. I'm not going to trade it. It's as simple as that. But if you wanted to trade it, it's very simple. Trade the candle, or if you want to be a little bit safer, put your stop above there and put your entry there, take some profit before you get to that low, I think would be wise. Now, the one that I think is probably, and let's go with the trade of the week, Ash, back to it's Monday, so we got to do trade of the week. I've got, and this is a very short-term trade. It's not even a medium-term trade. It's just a short-term scalp, really, at the end of the day. And I think it's Kiwi Swissy. And I'll give you the reasons why. Kiwi Swissy has been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row bullish. Now, if I go back in time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 capitulated. I can't see another time. Hang on, I'll go back a bit further. Where that has been the case. 11 days in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Seems to get to 10 and stop.
You know, the Swiss is a really interesting currency because they've been buying quite a lot of foreign currencies recently, and
have they?
Yeah, because you know they obviously sort of like they need to try and control their currency, and that's how they manipulate it. You know, that's how things are pegged. And in a way, even though it is a floating economy, it's a floating currency. It still kind of has to peg itself to certainly the dollar. And at some point, they're going to have to offload, you know, those currencies, and that means that they're going to need to buy it back with the Swissy, which does pump the price. So there is a potential for the Swissy to strengthen just off the back of those particular metrics.
Okay, that's interesting. Of course, we'll never know when until they do it, because they're like that, the Swiss National Bank.
Yeah, they probably won't do it until it's crucial.
Yeah. That, well, maybe I don't know. I shouldn't say I don't trust them. I just say I don't trust them.
But we don't. Yeah.
So that 11 days is telling me that there's time for a retracement of some kind. Now, I see the monthly pivot way down here, untested. Okay, it's only the first week, really, of the month. But I also see, from where we are at the moment, 65.39 down to that red line, which is where I've targeted 118 on pips. And I think that is a decent enough level for that retracement to go to. Won't upset a thing. It won't upset the cycles. It won't upset the momentum. It's just simply a retracement play, and I think it's valid. I'm not going to scalp it. I will wait for setup, but I think if it does set up, and of course that's an if, then that will be my trade of the month. So talk to me more about, is that possible to see the Kiwi decline against the Swissy? And now we've got a case for the Swissy possible to rally, but you know, that's a bit hairy-fairy. Apart from that, what are your thoughts?
Well, I mean, what happens if New Zealand? Because I think there's an expectation that New Zealand are going to start to either taper or start to hike relatively soon.
I think tapering has already begun.
Tapering's already begun. Yeah. So there's going to be sort of so the next step is probably going to be, I suppose, further tapering or maybe rate hikes. That alone would suggest to me that people are going to be possibly taking profit before the next announcement is due. And isn't it? It's sometime this month, isn't it? A couple of weeks or something.
I'm not sure, mate. I'll have a look.
It's not far off. I don't think it's far off. And I think if the expectation is like that, before the event, you do tend to see a bit of profit taking if there's a bit of a pump, just in the same way that you tend to see buyers coming in if there's a bit of a dump before an event like that. So that in itself would suggest that there could be a switch in psychology where, you know, who's going to want to buy at this particular area when there's that uncertainty of a major event, and the chance that you could probably get in a little bit lower. So I would have thought some profit taking could happen here before we get that announcement. Now, after the announcement, we're potentially back on again. But you know, the uncertainty, you know, who knows what's going to happen next? We've seen what's kind of like going on in that particular part of the world, and some restrictions kind of coming into play does affect the currency, and it does affect the economy. Does it change the roadmap? Possibly. So because of that uncertainty, then that would be enough for me to say, you know, fine, if you've got something against the Kiwi after it's at a resistance level, then that may well give us an opportunity in the short term.
Yeah, I'm only talking short term because I think it's got far better prospects than the Swissy, because the Swissy is just, well, question mark now. I really don't know, given what you said, but I think, you know, the Kiwi and the Aussie and the CAD have, you know, got really strong potential going into the next 12 months, I would have thought. We'll see.
Yeah.
But yeah, I think if that does set up, that will certainly be my trade of the week. What's yours? Have you got one that's hot?
I think trade of the week is probably going to be remaining on the equities. You know, if I can get something on the equities, then I'll be quite happy with that. I still like gold. I still do like gold, and I have taken a trade with gold, but I only think the price is okay with what I've got with gold. So I think gold's got a chance to retrace, and I'll quickly kind of share my screen because we may as well talk through this. Gold.
Did I talk myself out of trading this long last Wednesday? I mean, I didn't, so obviously I did. I didn't take the trade, so obviously I did talk myself out of it. I was going to trade this, wasn't I?
I think so.
I think I said we had a slingshot set up, and we did have a slingshot set up, and it burst through it.
Let's have a look here. So gold has seen some really good price action. I think it's got one of the nicest looking trends that we've had, you know, across the board recently. After the big dip to the downside, it's really trended very, very well to the upside. Now, for this to really kind of continue, it's got to break through the highs, and if it does, I think that there's some, you know, genuine open water. Over the short term, what we've got is this kind of going on. There's a nice kind of break of a level. So it looks like this is the break point with gold. And there's also a
classic
trend line
slingshot.
down.
See, that's what I saw last week.
Well, you did. When you said, did you talk yourself out of? Do you mean to talk yourself out of gold?
Yeah.
Yeah. Oh, mate. Yes, you were talking about this bar, weren't you? This red one here.
No, even lower.
You might be talking about
the break of the trend line.
It was this one, was it?
Those two, the little indecisive red bar followed by the seller bar.
Yeah, I think you're right. Yeah. I do remember you saying about that. It may well come back and test that price, you know, minimum, and I suppose that's what I'm talking about with gold. I think that there's a chance that gold comes back to 1820 area, maybe 1821, something like that, which is a $6 to $7 move lower before it goes higher. Now, if the trend stays intact, what I quite like about this is, apart from the spikes, you know, it is a little bit volatile when it comes down to its lows. But the closing areas are good. You know, it closed on this point here. It comes down, it breaks through, and it closes there again. And that's a really, really clean looking trend. The same thing happened here. breaks through, comes down. It actually closes a little bit higher, but there was one there. It's very, very close to closing near the breakout point. So if the same thing starts to happen here, you know, if you see the price come down, maybe come up and close above the point in the next day, 2 days, 3 days, or something like that, that would be a relatively good signal, just because of that seems to be at this particular stage the personality of this gold rally. So so I like gold, and as I say, I am in gold already. But for me to sort of, you know, want to see this continue, and for other people, that the thing I'd now want to see is it come down again and make sure it closes in and around the 1820 level and then go back up again. Because you know, if we're talking about trade of the week, then it probably would be this stuff rather than anything else. I think gold is a decent longer term play, which is why I'm kind of trying to ignore it. I've got the trade on. Didn't get a bad price, but there's still a chance, because of these you know, these candles, the way that these candles are forming, there's still a chance I get stopped out at break even rather than actually getting a decent rally. But that would be my next step. So so for me, it's gold, mate. I think people look to me like they're buying some protection, along with pumping the equity markets. The bond yields are a bit of a problem. They are still kind of spiking a little bit. So it's not by any stretch an out-and-out win. And there's also a chance that that you know, the rally doesn't happen from here. It actually comes down to this point, which would create an inverted head and shoulders before it starts going up again. You know, we might be looking at something like this. So I'm trying to kind of get in and ignore it. But it's possible that it plays with me a little bit before it actually does anything that I need it to do. So it could be that, you know, we get this kind of scenario where we've got this inverted head and shoulders going on, which does bring us down here, and my stops are more kind of below this area than this area. So I need at least a few days to for it to hold before I'm going to be sort of like shifting the stops at all. I'm gonna leave a lot of room with this. And I quite like the seasonal aspect of gold as well. So there's a decent chance, actually, if you compare the dollar seasonally to gold seasonally, they go in opposite directions, which is always positive if you are looking for the pair that you're trading it against. Mm-hmm. So I'm sticking with this one right now, mate.
Yep, makes sense. I'm gonna have to start trading it. Just gonna have to, mate. Have you got a CAD yen chart there? If not, no drama.
CAD yen, I can.
Lewis is looking at CAD yen and wants our opinion.
Okay, let's have a look. So on the monthlies, monthly is sort of like stating anything above 88.50 would probably get the buyers back interested again. So let's mark that off and see how that compares to the other signals. Little head and shoulders pattern formed, but it looks like it's getting a little bit long in the tooth at this side. So that's a good sign for CAD yen upside. Almost a kind of a vicious kind of looking inverted head and shoulders there. That looks pretty good to me. A break and a retest of somewhere in the region of 88.30 to 88.50 looks pretty good. Let's have a look at this on the 4 hour. And it you know, it does depend on what you are talking about time frame wise, of course, but you've been talking about the CAD potentially being bullish in the longer term. And if I was looking at this, that's kind of what I'd want to see. I mean, let's see if we've got any confluence here. There's quite a lot of confluence here. This looks to me like the sweet spot. Somewhere around about the 88.50 looks like a pretty good level to be looking for the longs. Short, I wouldn't be interested. You know, if you're looking at the short, you're looking at the same area, which is why we want it to break and retest. So there is a short around about 88.25, and there's a long at 88.25 as long as it breaks through and comes back again. I don't love the yen. I think the yen may well start to kind of turn. It will depend on the confidence that the market has for the rally to continue, of course. But that would be my current take on it. I wouldn't mind a short to go long if there was nothing if there was nothing out there which would suggest a CAD rally and a yen, a dump in the yen. So that might be okay. But if I was going to do that, it would definitely be 88.25. You know, somewhere in that area before I was looking at the short. Not interested in the short here. It could happen, but there's too much confluence up here to suggest that would be the sweet spot to me. And you've also got a little horizontal level there as well. So this is the area of activity, in my opinion, Lewis.
Yeah, I agree. But I'm kind of the opinion. That's the daily, right? Maybe a smaller time frame. I'm thinking long to go short, frankly, or long to make a decision at that area.
Yeah. Well, I mean, a long to go short wouldn't be a bad idea if you can get it, because if we can go long here, push it up to this point, go short there, and get it down possibly there. If it does go through, it's no big deal, because you've still made the money on the long to that point. Rather than taking profit, you've made the money. So if it does go through, then you can start thinking about adding to the longs, potentially cancelling the short, or forgetting adding to the longs if you don't feel comfortable with that. But you could potentially cancel your short when it comes back again. So I think if you get the right area here, then there's a little bit of playing to be done. So yeah, a long to go short looks pretty good. You like this bar though, don't you?
Yeah, I don't know if I'd like to trade it though. I don't see why. In context, I don't see a trade there. But what I do see, if you go to the monthly chart, and I'm surprised that it's not showing on your chart as it is on mine, or maybe it is. Yeah, a little bit wide. No, it's not. Your high is October 2014. That high.
This one up here.
Yeah, that's kind of crazy.
December.
Now go back to now go back to the previous high. So that's your pivot point. That's your midpoint, right there.
This one?
No, sorry, go wider. Zoom out, yeah.
Oh, I can't go any. I haven't got any more data.
Oh, you can't. Okay, there's a big high on, where are you? Oh, no, June 2014. Yeah, there's a big high at where? Well, global financial crisis, probably.
Right.
Let me see. It is at, October 2017. Sorry, 2007. So there's a big high up there that goes bang through where you are. And then if you go to, I'll tell you where this cuts through these candles. If you go to the bull bar that made the high, where you are, there, at market, there. If you come down about 2/3 the way down that bar, there, and join that up with the high that you've got. With a trend line, sorry.
Oh, okay.
The June high, yeah.
June high.
So the big swing high that you've got left of chart.
This one here?
No, the big one here, right up the top. Yep.
Yeah. So we're doing that, or we're doing this?
You're doing that. Just come down a little bit lower. A little bit there. No, even more. There, where you had it.
Yeah.
There, perfect. That's it.
Yeah.
So that's telling me a different story altogether. So that's telling me the long to get short makes perfect sense, because that then confirms a false break of that trend line.
Yes, that is, I see what you're saying.
But that's going to take a lot of time. So that's why I say long to get short makes sense if that's going to play out. And there's nothing to say that it will, but it looks very much like it's setting up to go as a false break of that trend line.
Yeah, I get it. I mean, I suppose it's also about your different approaches as well. Because if I was using the way that I'd prefer to trade it, it would probably be waiting for it to come back down to this level. I mean, it's going to be a much longer term trade, but I quite like it. It's already done it, hasn't it? Which is the problem. But maybe one more visit down here. Yeah, long to go short, and then long again down here at around about 84.50.
Yeah, don't have a problem with that. Yeah.
In this area, you know, you have to say that the short is more likely technically because of the resistance levels that we've got kind of going up, which is why it's got to break and retest if you're going to go long. But you know, this area is definitely a resistance. This is a sell zone up here, so it's a little bit. It's not there yet, but up here there is a sell zone around about 88.25, as I say.
Yep, Lewis is seeing a shoulder there. I think maybe even where the current high test bar is. Maybe.
Yeah, there could be a shoulder. There could be a shoulder here. Yeah, maybe there's probably enough room there still for and you're fairly close to the high end of it as well. Hasn't touched that level. I definitely want to see it up here before going short. I wouldn't want to go short here.
Yeah, agreed. That's and that's going to be very similar to the area you just pointed out before.
Yeah, right on that trend line.
Yeah, the same level. Yeah. So yeah, I think we've got a case there.
Yes, I think so. There's something there. Okay, mate. Well, let's call it a wrap. I think.
Yep. Yeah, I won't be in front of the charts too much more now. US holiday. It's Monday. Don't want to trade the euro.
Yeah.
No, I think it's a tomorrow day for me.
Yeah, I think you're right. I mean, it's the FTSE is frustratingly stuck at these higher levels here, not tradable up here. Probably, you know, this bar does suggest that we might start to see just that little bit of weakness up there. So, so it's possible that we get a little bit of retracement from this point back down. I'm not sure if it's going to come here now. You know, you have to start now looking at the 71.60 if you're going to be sort of getting involved in anything short term, which I think is okay. You know, I wouldn't be completely against trading it up here, but I want to have a look at it. I don't want to move my my limit orders to that point. But for it to now come down to 71 from 71.70 to 71.50, we're talking about a third of 1%, a third of 1% drop. Near enough. You know, it's in the ballpark. And it's going to take some data to drive that down. And because the US is closed, not sure whether that's likely. So we're probably more likely to come back down to a more shallow area, hold this point and continue to move up. So my new sort of way of approaching this now for the rest of the day might be to look here, see if it holds, buy in and come out again at the highs. Might get around about 10 to 15 pips out of it. So I'm going to persevere trying to make some money from the FTSE today.
Right, mate, you've got work to do. I've got bugger all to do. I'll just relax till tomorrow.
Great stuff. All right, guys, thanks so much for, as always, for popping in. Thanks to Angel. Is it Angel today?
Yes, it is. Yep.
It is good to have you back, Angel. Thanks for looking after us. Thank you to you, mate. I'll have a quick chat with you after the show if you're still available. And the rest of you, we'll see you tomorrow.
Yep. Happy days. Let's do it all again tomorrow, guys. Thanks for your company. Thanks for being our trading buddies.